Welcome back to Crypto Hustle 101. In this video, I'm going to go over my simple trade continuation setup I use for a trending market. This is one of the techniques that helped me understand technical analysis better when I first started. And that's because it gives you a specific criteria to look for and action to take when that criteria is met, from trade entry to trade exit. That being said, let's jump right in. I was introduced to this strategy by Brian Beamish at The Rational Investor. It's based on the principle of how a trending market actually moves. In this first example, we're using Solana USD on a one-day time frame. And at this time was a bullish uptrending market, and that's identified by having higher highs and higher lows. The next thing you're looking for is a consolidation with a retracement of at least 33%, but not more than 66% of the initial move. And we're going to verify that with our fib retracement tool. Come over here in the menu. All right. Go from here back down to here. All right, and inside of the settings, what you're doing, let's go in here, and you're going to set it up like this: 0, 0.33, 0.66, and 1. Hit OK. So as you can see, when we pulled back more than 33% of the move down to here. Next thing you want to do is you want to duplicate that fib retracement. Just go ahead and clone it and line it up with the lowest low, like so, at the bottom here. Then go into the settings and make some changes. It's the same settings, you're just adding 0.25 and 0.50 and reversing it or unreversing it. Hit OK. Now this red area here represents our risk zone, with 25 being our reference entry level and the bottom right here being our stop loss. The next thing you're looking for is 3 higher lows, starting with this one, to defend our stop. That's going to be down below here. So that's 1, 2, 3 higher lows. And once you get that, you're able to enter around the 25% level. As the trade progresses, once you reach the 50% level, you're able to move your stop from down here to scratch, to where you won't take any losses if the trade goes against you. At the 66% level, you're able to lock in some profits if you want to, or you can wait to the actual target of 100% up here. Now that's a basic overview of how this technique actually works. In the next example, we're going to go over how you apply it to an asset that's going parabolic and very volatile. For this example, we're looking at FET-USD on the 1 hour time frame. We have a strong uptrend here with higher highs and higher lows. Now let's use our fib retracement tool and trying to find where we have at least a 33% retracement. All right. Come up to here, now 33%. And this one, you can see it actually wicks past 33%, but it doesn't open and close below there. So let's keep looking. All right, same thing here, doesn't reach 33%. And once we get to here, we do actually see that price retraces down past and closes below the 33%. So at this point, I would start to look for other reasons to think that price may reverse or start to consolidate here. If we look at our indicators, we can see that we're in oversold territory. We also have a slight bullish divergence here with MACD slanted higher. Price is actually dropping here. Let's go ahead and hide this for now. And now we can go ahead and duplicate this. And move it like we did earlier. Line it up with the bottom right here, this low right here. Let's go into our settings and make those changes. Come back here and look for our 3 higher lows. We got 1, 2, and 3. And from that point, we come back into the 25% level right here. So we're clear to enter a trade. And as you can see, it didn't take off right from here. It gave you plenty of time to enter. Let's actually see how much time that is. All right, we'll just say here. And it didn't actually take off till about here. So I gave you 1 day and 17 hours to enter a trade. And in that time, it actually was defended from going down lower at this low here. And the thing about this setup, it actually has a 3-to-1 risk to reward ratio built into it. Let me go ahead and go to our long tool. Come over here. All right. You can see a 3-to-1 risk to reward ratio right here. Now, as you can see, as an asset starts to go parabolic to the upside, all that emotion in the market makes this asset extremely volatile, and you're going to see lots of wicks. You see a wick here, you see that extreme wick right here. So like I said earlier, once you get to this 50% level, you can set it to scratch. But if you were to set the scratch right here, if you got in right at the 25, it'd nicked you and got you out. You got to use your discretion. You might want to set it maybe a little below, or what I like to do is I'll set it right at this last low right here to keep me from losing out on all these potential gains here. All right, let's go ahead and zoom out a little bit, see what happened. As you can see, it all went way past our target to here, came back down to here, came up here before consolidating some more, wicking down, then shooting up higher. Now for me, I like to start with this basic setup, but once price starts to go crazy, I start to add more advanced techniques on top of it. Like for instance, I would use this range right here to scale my chart. Let's go over here. Alright, hit the circle tool. And we just line it up. About there. Go into settings. Lock the bar to price ratio. Okay. So now we're locked in. So now from here, I would just draw a circle based off that range. So as you can see, price came up, ran in a circle, and then had maximum resistance at the top of the circle. Wick down, came up, then went past it. So now we're going higher. I would just extend this to the right. Hit OK. So we went from here to draw the circle. Now I'm going to draw a circle going from here to here. Gotta turn this off. Come down. There. Now you can see, first we went from here to here. That gave us this circle. And now probably going from here to here, that gave us this circle. Price comes up, stops right at the circle, busts through, and comes back down. If we draw a 45-degree angle from this point right here, we can see that once price broke down past the 45% level, broke all the way down to here. Now let's take a look at our last example. We're going to take a look at near. And here, price is actually dumping down. We do the exact same principles, we just do them in reverse. We're looking for a downtrending market. Then we look for it to push back up past 33% like it did here. Then we're going to go ahead and duplicate this, change our settings, look for our 3 lows here, here, and here. And they're somewhere around here, and our target will be down here. So that's going to be it for this video. Hopefully you guys got something from this. See you next time.